India's economy continues to surprise the world. While many major economies are struggling with slow growth, India remains one of the fastest growing large economies on the planet. But how strong is India's economy today? What is its global ranking? What do GDP, CPI, WPI, and the newly introduced PPI actually mean? In this video, we will break down the latest state of the Indian economy in simple language using the latest available data and explaining what it means for ordinary citizens, businesses, and investors. India's economy, where does it stand today? India is now the fourth largest economy in the world in nominal GDP terms, having recently moved ahead of Japan according to several international estimates. Only the United States, China, and Germany remain ahead. India is expected to become the third largest economy within the next few years if current growth trends continue. India's GDP is estimated to be around 4.3 to 4.5 trillion US dollars, making it one of the most important engines of global growth. What is GDP? GDP stands for Gross Domestic Product. It represents the total value of all goods and services produced within a country during a specific period. Think of GDP as the economic report card of a nation. If factories produce more goods, farmers harvest more crop, and businesses provide more services, GDP rises. India's largest GDP growth. India's economy grew by an impressive 7.8% during the January-March 2026 quarter, beating many forecasts. For the full financial year 2025-26, growth is estimated at approximately 7.7%, making India one of the fastest growing major economies in the world. The key drivers of this growth include strong infrastructure spending, growth in manufacturing, construction activity, digital economy expansion, resilient agricultural production, rising private investment. Future growth projections. Looking ahead, growth is expected to moderate slightly but remain strong. IMF suggests India's growth around 6.5% in 2026. India's economy survey projects growth in the 6.8% to 7.2% range. RBI recently revised its 2026-27 forecast to around 6.6% due to global uncertainties, oil prices, and weather-related risks. Even with slower growth, India is expected to remain among the world's fastest growing major economies. Understanding inflation. Growth is only one part of the story. The other important factor is inflation. Inflation measures how quickly prices are rising. If inflation is too high, food becomes expensive, fuel costs increase, household budgets get squeezed. If inflation is too low, economic activity can weaken. This is why economists closely monitor different inflation indicators. What is CPI? CPI stands for Consumer Price Index. CPI tracks the price of goods and services at the retail level, what the consumer actually pays. This is the inflation measure most people feel directly. It tracks changes in prices of food, housing, transport, education, healthcare, daily necessities. In simple terms, CPI tells us how expensive life is becoming for consumers. India's retail inflation, measured by CPI, stood at around 3.48% in April 2026. Economists estimate it may have moved close to 4% in May 2026. This remains close to the RBI's target level of 4%. What is WPI? WPI stands for Wholesale Price Index. Instead of consumers, WPI tracks prices at the wholesale level. It measures the prices businesses pay before products reach consumers. WPI is applicable only for goods, not for services. For example, a manufacturer buying steel, a wholesaler buying rice, or a fuel distributor purchasing petroleum. India's WPI inflation rose sharply to about 8.3% in April 2026, a multi-year high. The rise was driven mainly by higher crude oil prices, fuel costs, manufacturing inputs, and commodity prices. Retail versus wholesale prices. The Consumer Price Index CPI tracks the price of goods and services at the retail level, what the consumer actually pays. The Wholesale Price Index WPI measures prices at the wholesale or producer level before goods reach the retail market. Retail prices include taxes as well as trade and transportation margins, which can cause them to rise faster or slower than wholesale prices. The new PPI, a major change. Now comes one of the biggest changes in India's economic statistics. India is introducing a Producer Price Index or PPI alongside a revised WPI system. So what is PPI? PPI measures price changes received by producers and service providers. Unlike WPI, which focuses mainly on goods, the new PPI will also include services such as banking, insurance, telecommunications, railways, and other service industries. This brings India closer to international best practices. Why PPI is important? PPI help economists identify inflation pressures much earlier For example, if transportation companies, banks, or manufacturers experience rising costs today, those increases may eventually reach consumers tomorrow. Therefore, PPI acts as an early warning system for future inflation. It will also help policymakers and businesses make better decisions. Now, let us see what are the challenges ahead. Despite strong growth, several risks remain. Global geopolitical tensions, rising oil prices, weather-related disruptions, inflationary pressures, weak demand in some export markets. These factors could affect growth and inflation over the coming years. Conclusion. India's economic story remains one of the most closely watched in the world. The country is now the world's fourth largest economy, growing at nearly 8%, attracting investment, expanding infrastructure, and leading global growth discussions. At the same time, inflation management remains crucial. Understanding indicators like GDP, CPI, WPI, and the new PPI helps us understand where the economy is heading. If India can maintain strong growth while keeping inflation under control, the dream of becoming the world's third largest economy may arrive sooner than many expect. Do you think India will become the world's third largest economy before 2030? Let us know in the comments. Like, share, subscribe for more current affairs and economy updates. Thanks for watching, and I will see you in the next video.